You talk about names that are down, and so many of the growth.
Are you going to mention Boeing?
I'm going to mention PayPal and Twitter and Snap and Chewy and Palantir and CRISPR and Virgin Galactic and Chegg.
Chegg's got hit a little, unless that was a 4-for-1 split.
A little. I mean,
Peloton.
What do you do with some of these
Peloton.
names? And DraftKings and Robinhood and Bumble and Roku and Beyond Meat. Go on and on.
Well,
these things are all off 40% from their highs.
Well, they were part of an era.
And, by the way, in a very recent period, let's call it the last 8 weeks.
Well, look, these are all now regarded as being areas where a lot of companies have come public, and they actually have competition. There's not been competition in the payment space. Now there's competition. Beyond Meat, which did not deliver a good number at all. Well, you can have Oatly. Well, Oatly's doing badly. I met with Twitter last week.
There are some of the numbers, by the way, gives you a sense as to what they are off.
I met with Ned
recent highs.
Ned Siegel, who's
fairly
the
recent.
CFO.
Yeah.
And we were I was marveling. I said, look, business is pretty good. Stock is going back to near the price where Salesforce tried to buy it. But now there's no talk of takeover.
Are there opportunities in these names, or are these representative of a very narrow market?
Well, I still keep thinking about
it's like 10 names that have powered almost 50% of the gain in the S&P.
The percentage of S&P names at one-year lows is at the highest since April of last year.
No, this is a bad market in a lot of ways. But it's also, somebody could argue, a market that's come down so much, can't you find some bargains? Now, I was working on Chegg yesterday because of 25, and I keep coming back to that conference call where when talking about pass-fail, there's too many people taking pass-fail.
Right, so they don't need the textbooks as much.
Or they're just not going to school at all because they're getting great wage increases, especially at the low end.
They're not getting to go to school at all, or they're going to schools where they get A's. I mean, one of the things that Dan Rosenzweig talked about, which is that teachers are now grading more easily. No, how's that? So, but you want to bet that that's going to be the case when things change? Maybe you get back into Chegg because people will not do pay. Maybe people go back to school. Or maybe you say, wait a second, school's $80,000 a year. I don't need that pay that if there's such good jobs. Chegg is really probably, I'm so glad you brought up Chegg because that may be the big conundrum. Like, how did that stock go from, it was 4 times higher? And I think the answer is that it shouldn't have been where it was. But I don't know if it can go back if the people don't, if it's a secular change about college.
Well, when a growth stock gets hit like this one did because it's no longer growing at anywhere near the rate,
that's good
it goes
value.
115 to 25.
But when does it become a value stock? At what point does it become a value stock? Or are there no value investors?
Remember when it was 3?
Yeah.
So there were a lot of people who were
He came on my show
riding.
and he cried when it was 3.
Yep.
Okay, let's talk about the here and now because you are Mr. Market. Best Buy.
Okay, Best Buy.
It was not that bad.
Okay.
The guidance wasn't great, but Corey Barry keeps low guidance.
Yeah. Corey Barry will be joining us later in the show.
Yeah, but not when I'm here.
No, not when you're here.
But people then say to me, Jim, have you seen the chart? Have you seen the chart? Well, suddenly everybody's a chartist. People have like fundamental chart. Be careful.
It's not good.
No, but Williams-Sonoma had a quarter that was beautiful. The stock got hit, and now it's flying. Corey Barry has figured out a lot of supply chain issues. I want to own that stock. You want a stock that reported an unbelievable quarter and Dick's quarter, I'm saying it was perfect. Perfect.